Hello traders, this is Michael Huddleston with the Pro Traders Club entry for July 19th, 2011. We are looking at the fiber chart. This is a 5-minute chart, and we are presently looking at a vertical line. This denotes midnight time in New York. Okay, and here is the low that formed. Here is the London Open time frame we like to look at. 7 a.m. GMT time. Note that on your charts, wherever you are in the world, that's the window I'll begin to look at for London Open. Okay, we placed the low in during the first 4 hours of trading, and market traded up. If you were sleeping during all this time in here and you woke up for New York, not to fret. There is a means of trading that. We've learned that in the New York Open webinar. Okay. Price trades down into this level in here. Now, what do you suppose we could use to get long there? Okay. Well, if this is London Open, this is New York midnight time, what is all this activity here? Okay. We will note this as the Asian range. And lo and behold, price comes down. Now this is a time when you got to really pay attention to just not only the bodies, but the wicks in here for the Asian range. And you can see it nails it here. But generally anywhere in the vicinity of 141.50 institutional level and 141.20. Let's move that down just so you can see what that would have looked like. You would have been watching this. I'm sorry, 30. Small number 30 right here. So you would have been watching 41.30 and 41.40, small numbers. In between that, obviously, rest 141.35. So, which also resides with the previous day's Asian range, going into London Open, forming the low of the day, trading up. Okay, and we actually put in the average daily range pretty quickly for the fiber and the cable today. This low right here, I'm going to show you how you can use, because I had a couple questions sent to me by email asking me, and I think I glossed over the last gentleman's question on when, I'm sorry, what swing high or swing low do I use, or which high or low do I pull my fib from to get these levels. Okay, and I'm going to give you some really cool tips today. This Pro Traders Club is going to be kind of quick, but still it's going to be chock full of stuff. So get your notepads out because you're going to need this for future stuff. It's really, really neat. All right, when you pull up your fractals indicator, which really delineates where your swing highs and lows are, just look at that like that. Okay, these are basically all potential areas to pull fibs from. Okay, now while this is nice in terms of really quick eyeballing, these are determined by for instance, we'll use this one here. This swing high or fractal for this indicator is a fractal high. The way it's classified and how this indicator determines this as a high, it has a candle with at least 2 lower candles. In other words, the candles preceding this one here at the highest point, each candle preceding it must have lower highs than it, and vice versa. On the other side of this candle, there must be at least 2 candles with lower highs than the candle in the middle. Okay, so basically it's a 5 candle formation. The highest candle in the middle must have 2 preceding lower highs and 2 succeeding lower highs, okay, which would classify a swing high for fractals, okay, or this indicator. Me as a short-term trader, I got this concept from Larry Williams, and if you guys have been following along in some of the chats that we've been having in Baby Pips, I realize sometimes you guys aren't really hip to when I'm showing up, but that's all part of the draw, guys. You got to be in Baby Pips a lot. Plug, nudge. Just kidding. I really will have a scheduled time when you guys can meet with me and we can bounce some ideas off one another. But I recently suggested individuals do a search on Larry Williams' seminar notes, which are really widely being passed around the internet. I'm not going to go into whether or not that's good or not, because obviously it demands works being passed around for free. But it is common knowledge that this stuff is out there floating around. So if you happen to just stumble upon it by happenstance, you'll know that his swing high is really just a high with a lower high on either side, and a swing low is a low with two candles, one before it, one after it, with a higher low. Okay, so he only requires 3 candles or 3 bars to classify a swing high or swing low. Now, with that, all that being said, okay, there is a limitation on the fractal indicator. Sometimes you will not see a swing low or swing high that I might be eyeballing, and one in particular is right here. Okay, now you can see we do have a candle with 2 candles preceding it that had higher lows, and obviously there's 2 candles here prior to that. Okay, now if I drill down to a 1-minute chart, and you know what, just for sake of completion, let me do that, because I'm sure it will be beneficial to those that are wondering. Okay, in this area right here, this rectangle here, I'm going to drill down to a 1-minute chart. Okay, and we gotta scroll back. And this concept was introduced multiple places just using a rectangle tool, and you can see now that there is a cluster of lower time frame fractal highs and lows in here. Okay, but here is a fractal low. Okay, so if you were looking at a 1-minute chart, not that I advise using a 1-minute chart, but just as a means of understanding why I use these turning points, this is how complex it can get. You don't need to be trading this complex, but you'll see later on as we go along that there was other factors behind this. But this is that same vicinity in terms of price action. You can see that they did create a fractal in the lower time frame. But going back to a 5-minute chart, okay, and the question was this trading down to the Asian range highs here. Okay, now we went above it, traded back down to it. These are all common staples to the concepts I've been sharing for over a year now. Watch how we can use this low here, and we're going to pull it up to the high that was made during the London session. Okay, so here's the swing low up to the high made in London. We traded down into optimal trade entry in the New York open window at the the Asian range high, now providing support. We have now candlestick pattern. What is this? A railroad track. Okay, these are railroad tracks. If you don't know what they are, just do a Google and you'll learn all about them. But that's one of the few patterns I like to use for candlestick patterns. I think there's only 5 that I actually really like using, and we'll go over those later on. It's not important. It's not imperative that you know them now, but Railroad tracks is something I've used in the videos, and it's not a very difficult pattern to use for trading, but it is one that I find that is very rewarding when it's used properly with time and price theory. Okay, so now looking at this window of opportunity, we had moved up and then traded down into the New York open time frame. Obviously the trend of the day is clearly up, so to get in sync with that and do a trend trade, we could look to go long right here, trading off of the Asian range high, now trading as support. Okay, so now buying that right there would be excellent. Just a pure support resistance level play with the confirmation and confluence of the optimal trade entry in here, 62% retracement level here, 79% retracement level here. Okay, now if you're looking at the 5-minute chart and you had missed this pattern here, okay, you can clearly see the shift in market structure. We have a swing low here, lower swing low, higher swing low. So if you are looking to buy on strength and you want to use a buy stop order, you could look to buy on a stop above this candle here and risk a stop below this low here. That's one way of using an entry pattern concept of trading outside of what I've already shared. Okay, I don't like to buy on stops unless it's a buy stop on my short. But if you do like to buy on stops on your entries, that's one way of doing it. We'll cover all that stuff later on, but this was the opportunity for today. And market trades up. Now here is the stops here, here, and clearly obviously would be above here. Trading up obviously gave you a very handsome potential. Let's say we got the 40 level. Okay, it had a pip range of 72 pips. Did not touch the high on the London open session, but did give you an awesome opportunity to get at least 70 pips possibly. Okay, then traded softer at the London close. Okay, and I'll leave this pattern here for you 1-minute chart followers. You can see what that is if you turn to a 1-minute chart. It should be jumping off at the page at you. Okay, now we have a shift in market structure here, but before I do mention, we were looking at a couple things at the same time frame here. All in here I was talking about, and I was tweeting actually. So if you haven't joined Twitter and haven't got yourself a Twitter account and synced it to your cell phone, because you can get ICT live direct to your cell phone if you go to Twitter and do a search on ICT_baby pips. That's one way of getting in touch with me. I go throughout the day and I'll toss out some nuggets about what I see on the charts and some possible opportunities that I may be taking, not necessarily what you should be doing, but what I'm looking at on real time. And you can go on Twitter and pull up the tweets, and you can see that if I'm not mistaken, I think they're time and date stamped, and you can clearly see that they were timely. A couple gentlemen were following along today, and we were looking at some opportunities in the cable that I took. But let's finish the review here on the fiber, and we'll go to the cable in a moment. So here's the Asian range support. Trades up, gives us a nice little New York open session going into London close. A little micro fractal optimal trade entry in here. If you look at the cable, high to high here, okay, we had a SMT divergence. Okay, we'll pull that up in a moment. But this was your late afternoon opportunity for the London close on the fiber. And and let's pull up that 1800-hour window I shared with you guys before. Okay, here's 1800 hours. Put in the high here. If you pull up, here's a fractal high, here's a fractal high, here's a fractal high. Okay, so you can see the market structure in here. There's 2 points you can pull from. Okay, here is the 50% retracement level converging. But if we use the swing high here, let's pull this fib off because it is giving us a little too much going on. Okay, we do have the 62% retracement level up almost into the sweet spot. So here is your short for very, very late in the day London close setup for the fiber. Very handsome potential move in here. Okay, I did toss out a tweet earlier today, and I was asking everyone, how did we, how could we have actually expected this low to form in the London Open? Going into London Open, what was so special about this price level in here? Well, I tweeted the previous day on Twitter, and again, I'm plugging it a lot because I think you'll get a lot of that real-time stuff that we talk about in hindsight on these Pro Traders Clubs. It's a lot more dynamic when you see the ideas unfolding on your charts, and that's really what I'm trying to do, to stimulate real-time price analysis and price action right when I'm tweeting. So with all that said, let's look at why that price level stood out. Okay, and let's zoom out just a little bit. All right, there's an opportunity here that I was trading into fiber during the 18th, and I did get stopped out, but ultimately it did trade up to my level of 140.80 and promptly rejected and traded down softer. I've noted that the previous month high, which you can see here, this yellow line here, I'll put that on there, 140.73 for the fiber. Okay, once we got above that, we traded back down to it as support right in here. And let's use that same concept we learned just now. Now look at this low here to this high. Okay, look where it falls, between 50 and 62. Okay, if we used this low here, going back to the previous day's low, okay, we would have a 50% retracement level, which is really, really good. Fiber and cable really likes the 50% retracement level, so if you can find means of finding trades that have confluence of events at the 50% retracement level on swings, you get a really good opportunity that sets up. Here, buying this low here up to the previous high, pulling the fib from previous day's low up to high. We would have a potential reward of buying. Say we bought the 50 plus the spread. Say we got 80 just for the sake of safety. Going back up, retesting the high in here, it's about 54 pips. Very handsome. Okay, and that's just getting first profit out on the swing, not 20 or 30 pips that you would take out normally, but you would take some more off at the at the old high in here, and then leave a little bit to trail off and get the magnitude of 2 times this initial swing here. So basically, if you take this high down to this low, double it, add it to this high, you'll get this high here. Nothing new there also. This is all the same concepts we've talked about before. But now watch what happens if we start using market structure. Okay, so we have a low here with higher swing lows on both sides of it. Okay, now look at this. We have higher swing lows here, and this swing low here. So now this is an intermediate term low. Okay, so now we can use market structure to give us another intermediate term low, which would make this a longer term low here. And I know this probably went right over your heads if you're new to this stuff, but go back over the videos and study market structure and start classifying your swing highs and swing lows and watch how they nest out, and you'll see how this works. And that's the only way I can really explain it to you, is by actually doing it, marking your charts up, okay, and studying it. But using this low here, pulling up to that high, because now the market structure has changed. So now we want to use the fibs going in the direction, pulling it up to the most recent significant high, which would be in here. Look what we have: 62% retracement level, 79% retracement level, optimal trade entry right on the previous month's low, which is 140.73. Okay, and extrapolated move to the upside. So that's the reason why. Okay, this indicator for weekly highs and lows, monthly highs and lows, and previous days highs and lows. It's a very common MT4 indicator. If you guys want it and can't find it, obviously I will post it on the Baby Pips thread. I'm sure all of you are probably that are not familiar with it are probably clamoring for it now, looking for it. Give me some time if you do need it and you don't find it on the MT4 websites all over the internet. I will certainly have it available by tomorrow afternoon. So that was how the market reacted here. Now, looking at these lows in here, okay, at that same time frame, let's turn our attention over to the cable. And here's that same time frame. And let's go back just for a moment. You can see how we are making lower lows going into the previous month's low in the London Open time frame we like to monitor. Okay, fiber was making lower lows while the cable was not doing such a good job of going lower. It was accumulating. Okay, at the same time the fiber was making lower lows, testing and reaching for its previous month's low, the SMT diverged bullishly here. Okay, let's look at our pivots. Okay, we are at the central pivot level. Okay, this is GMT pivots. Let's toggle just so you get an idea of what New York pivots would have looked like at that moment. Okay, generally the same area. But on Monday, I generally will use the GMT pivots as a standard. So in case you're keeping notes, which you should be anyway, just remember on Mondays, stick to GMT pivots and they will serve you very well. Okay, so trading near the central pivot, we had already moved up, consolidated, okay, and took off vertical. Now, if you had missed this opportunity going into the London Open, okay, you wait, because we put the low in, obviously going into New York Open, okay, which is right here. Okay, how do we take an opportunity to go in sync with the trend of the day? Well, we wait for the New York Open, after a pullback in here, wait for an initial run up, then a pullback. Okay, and let's look at that now. Here's the low we'll use. Okay, up to this high in here. Here's your 79% retracement level, 62% retracement level. You have all kinds of opportunities to get long for New York Open. Obviously, we are going to look to take profit here, and anything above it. Previous day's R1 here at 161.73. Okay, which was the actually the average daily range. Our tool that we posted on the thread actually called that level. I was looking for 161.80, okay, on the high for the day. It didn't get there. It just missed it by 3 pips, I believe it was. but my order to exit was nailed beautifully. I called that real time on Twitter, and I told everyone that the reason why I looked to get out there is because, number one, if you look at high to high here, made a higher high on the cable. We fulfilled the average daily range. Okay, 118 pips was the ADR for the day, and using the low here, pull up. Here's 118 pips here, and it just went, 4 more pips higher, and that was the high of the day, 161.77 on my feed. But if you look at the fiber, we failed to make a higher high at that same time frame. Okay, so smart money tool diverged bearishly at time of day. We were approaching London close. I asked on Twitter if we do trade the London Express, basically buying or entering on a long, you want to at least hold on to, at the very minimum, London close to get the lion's share of the move out. I have 1,800 hours denoted right here, and you can see clearly we did not put anything more significant higher or lower at that point, and we had traded essentially in consolidation, like I shared in the New York Open webinar. So you can clearly see that we have some reoccurring themes, and while I'm sure to most novice traders or those that are new to our group on Baby Pips, excuse me, my videos may seem a little bit too 20/20 hindsight, but I assure you these things are being monitored real time and traded. And now on Twitter you get to see real time, because I really don't have access to jumping on Baby Pips all the time and posting everything on there. I just found that Twitter would have been a really neat way of doing a real time, not an alert service or a signal service, but just a way of like tapping you and sort of, hey, look, this is what I'm doing, this is what I'm watching, let's look at it together and review it later on. So again, just in case the watchdogs are listening, it is not a service. I am not giving signals. I'm just basically sharing my my personal views on what I'm looking at and how I may trade it with my accounts. Okay, so that was the moves from the cable and the fiber. Very big 100 pip plus move for me today on the cable, and I used the fiber trading down to its previous month low, okay, to key off of, okay, this is going to be a really nice reaction level, or I anticipated it to be a nice reaction level. And then I just basically compared the two sisters, the fiber and the cable, and at those time frames when the market is predisposed to move significantly, one will tip the hand. In other words, watch your smart money tool, and one will diverge and give you the insight that you need to, basically add strength to your trading idea. And this obviously by itself would have been a buy, but when you add to the mix that the cable was unwilling to go lower at that same time frame, boom, takes off. And then for those that missed it, you have one more opportunity to get in here and get long. Okay, London close in here really wasn't able to get up high enough to do the trade here. It did get to 62% retracement level, and here from this low to this this high, this low. On Twitter, if you go on Twitter, you'll see this as a tweet. I was talking about well, this high here, okay, we ran above it, blew out the stops, and then traded it down. Okay, right about here, I was telling everybody that was watching on Twitter to monitor the 124. I'm sorry, 125 level in here. Actually, let's put that on the chart so we can see what I was referring to. All right, 125. Let's zoom in a little bit. All right, 125 in here. A lot of candles suggesting that 125, 61.25 was a level of interest. A lot of dealing range highs in here. A lot of dealing was going on. Obviously, the low here had stops underneath it. This one here very nice hammer. Would have had stops resting underneath it, but the market was certainly unwilling to get to that level, trading down into it. I was suggesting that those watching Twitter would pull the high down to that 161.25 level. Okay, and what I was suggesting may have unfolded was because this was a level that I was anticipating support at. That would have been the first level to look at, and then the low here that I was referring to in Twitter. Okay, if we note that, these were the two range lows. This is all going to be taught in the London close. I'm just giving you a little bit of insight because I'm going to give you a lot of stuff because I know you guys have been starving for new material. But using this swing here, which was anticipated while the price was here, okay, pulling it down, we could have waited, for materialization of a swing to bounce from this high. I'm sorry, this level here to a high of at least here, which I was calling on Twitter 161.60 level, which also comes in line with this previous high here on London. And the 79% retracement level here would have been a very nice opportunity. But that was one level, and then I suggested this level here. Okay, this low here. So pulling the fib again while we were trading in this levels at 161.55. I mentioned pull a fib from that high down to this level, as well as this one here, 161.25, down to the 161.03 level. And having done that, if price traded down to that level and pulled back up, you would see at least a 62% retracement level, and you can see how. Let's pull the fibs over so it shows. Okay, price runs right back up to that 62% retracement level, trades back down to find support at the 161.25 region, bounces again up to the 62% retracement level, almost into the sweet spot, but good enough for a London close right here, going into that 1800-hour time frame. So if you were long, you want to be squaring your positions right there, and that's when everybody hit the exit ramps and took their profits, and then you had your London close trade materialize. Okay, so that was a real-time wrap-up on a combination of what I did on Twitter and those that were watching. But this was the move I took up, going long in here, getting out at 161.73, and you can see that the market did promptly reject that level and trade it down. So that's a wrap. Okay guys, we are looking at a very interesting tool. Basically, you're looking at a seasonal tendency of one of my favorite pairs to trade, which is the British Pound. And, well, not really the pair that we're looking at the futures contract seasonal tendency. This is a graph that has been produced by a company, Moore Research. It's M-O-O-R-E Research. Okay, and what they do is they do a very comprehensive approach to seasonal tendencies. They really have a tremendous amount of data on all of the markets that's traded. And as a futures trader, back when I first started, I was fortunate enough to get this graph in a seminar from Larry Williams. Okay, so disclosure's sake and credit, I do not only want to give acknowledgement to Moore Research because they are the producer and creator of these graphs, but Larry Williams was the one that was able to get permission from Moore Research to share it in his seminars in the mid-90s. In 97, when I was able to get his seminar, I was able to get the British pound and all the currencies and a lot of the futures markets, bonds and S&P. And this data has been updated since the time I had first received these graphs. So this is a little bit more up to date. But I can tell you from my older version, it really isn't any different in terms of what the graph is displaying. If you're looking at it and scratching your head saying, what does all this mean? Okay, I can tell you it is a gold mine. Okay, it absolutely has so much going on in this graph. To a neophyte, it may be chaos, it may be meaningless, but for someone that has an understanding on how seasonal tendencies and seasonal influences on markets impact trading, it's, like I said, it's a gold mine. Before I go into the details of seasonal tendencies and how to use this one, and again, we're only going to cover the British pound tonight because it is one of my favorite markets to trade. I do have an affinity towards it. I understand its characteristics. I understand the animal. Okay, so the actual presentation that I am building, which is a whole collection of all the million-dollar concepts that I've collected from Larry Williams' work, some other authors out there that I haven't disclosed yet that will be credited, and a lot of my own work that I've discovered just with thousands and thousands of hours of chart time. But the main focus with seasonal tendencies, much like most of everything I've already shared, the caveat with it is by itself, seasonal tendencies are absolutely useless. You want to use them as a roadmap, basically. And let's just go over our salient points at the bottom here. Basically, we're looking at a seasonal tendency on the British pound. Okay, and consider it as a roadmap, okay, to historical patterns that could repeat in the future. This does not mean because it's done this over the last 25 years or the last 15 years on average. It just means that it's a high probability of it likely happening again. Okay, it doesn't pin down to the actual day. It just gives you a season or time window in the month, okay, when price should shift on a whole, and you'll make a major high or a major low. Okay, and before we go any further here, I wanted to make reference to this blue line here. Okay, if you track that across the graph, okay, for the most part, it traces the same pattern that the red line trades. Okay, the difference is basically 25 years of data collected and compiled is the blue line, and the red line, 15-year, okay, is a compilation of data over the last 15 years. So we have 15 years worth of sample set data and then 25 years of sample set data. And you can see because of a 10-year difference, there's very little shift in terms of what it's calling in terms of highs and lows that come into the market. The major point that I wanted to bring to your attention is the fact that if you look at the data that I've already shared in the previous videos, I talk about looking at highs and lows over the last quarter. Okay, 3-month highs and lows. That was your first tip-off to finding million-dollar setups. Now, a million-dollar setup, what does that mean? Well, a million-dollar setup, to me, is anything that moves 500 pips or more. In a futures contract, it would be 500 points or more. Okay, you can make a huge amount of money waiting and sitting on your hands every year for these time windows to come and look for technical reasons to get in sync with them. Again, do not trade on seasonal tendencies by themselves because, again, they'll just get you hurt. Okay, and my whole premise behind doing this and sharing this information with you is to help you avoid the things that I did. I mean, I lost a lot of money doing stupid things. I looked at seasonal tendencies and said, wow, June's going to go up. I'm just going to buy the first trading day of June. And, well, obviously you can imagine my hinder parts were handed to me quickly. Well, Basically, you want to look for technicals and other factors to support the idea that the seasonal tendency for a given time frame that's highlighted on this graph, and we're going to go into detail in a moment, but you want to look for technical reasons. And if you're a fundamental hound, look for fundamentals to give you an inclination that the seasonal tendency may come into play. Again, because it's not perfect, it does not guarantee future profits. Okay, it just gives you one more long-term perspective on when price should be making a low or making a high. If you just sit on your hands and wait for that time window and trade accordingly using your tools, okay, and what tools are we talking about? Well, the higher time frame tools are the COT data, commitment of traders. What are the commercial traders doing at that time frame? Okay, are they in sync with what the seasonal tendency would be suggesting? Okay, and what's the sentiment? In other words, what's the street money or the quote-unquote dumb money suggesting or expecting in the market? If you look at the seasonal tendencies in the market, for instance, April tends to make a high, the late April going into, excuse me, yeah, the pound usually makes a high in late part of April down through May, early June. Excuse me. And by waiting for an opportunity for the commercials during that same time frame, okay, here's April and May. If we see a net short position on the commercial traders and the sentiment is high or extremely bullish, we could expect a high to form based on the seasonal tendencies. We would also turn our attention to daily charts to look for, maybe if you're an indicator follower, you'll look for bearish divergences on the higher time frames. Okay, a weekly or daily time frame giving you a bearish sell signal. We as price action traders, we would be looking for possible rejections on key levels intraday on a higher time frame resistance level, and then look for optimal trade entries to get ourselves in sync with that. Okay, the best way to use the seasonal tendency is to note that every beginning of every quarter of the year, that means January, March, June, September, and December, okay, they typically start off each quarter with strength. In other words, if you just try to buy January lows, March lows, June lows, September lows, and December lows, speaking specifically seasonally, you are buying the highest probable times of the year based on seasonal tendencies for the pound. I'm not going to go into all of the factors that support why the pound rallies every quarter like that. I'm just telling you, this is what the data suggests. Okay. Now, if you look at your charts, and this is what I'm wanting you to do, I'm trying to stimulate your interest, and I'm going to tell you right now, if you're not interested in this, turn the computer off. Don't ever come back, because this right here, what I'm sharing with you tonight, is one of the most profound ways of approaching the market on higher time frames. And for position traders or long-term swing traders, this is exactly what you're looking for. Okay. Note that the pound also sees weakness in February. Okay, typically makes a tradable high in February down into the low at March. It typically makes a tradable high in July down into mid-August. Then somewhere in November, late October into November, there is typically some kind of a high that's traded down into December. Then we get a Christmas rally. Okay, now obviously the strongest buying opportunity or the strongest trade for the long side is typically waiting for September, okay, about mid-September, okay, it makes a very tradable low, and it rallies up into early part of November. The obvious key sell point of the year is the high made in late April, early May. So if you're a swing trader, long term, or a position trader, that's what you look for. The sell signal in spring and the buy signal in fall. Now I'll leave you with one question, and I'm sure you're going to jump. The answer's going to jump right off the page. Why do you think that I've used September as my starting point for the $1 Million Challenge? I wish you good luck and good trading.